Welcome to today's webinar. I'm Mike Payne, and your host for today is Jennifer Lang. Jennifer is an author, a speaker, and a licensed financial services professional who found her love for financial literacy the hard way. Her career goals were on track as she tackled the hustle and bustle of working in New York City as a corporate manager. That is, until life threw her a curveball that would change her direction. Her mother became ill, and Jennifer only had one choice. She left New York and became her mother's full-time caregiver. It was during this 10-year period that Jennifer learned firsthand the importance of how life insurance protects an individual and a family while they are alive, as well as how having essential estate planning documents can empower family members and relieve burdens. She found a new passion and purpose to help the underserved middle class protect against the emotional, physical, and financial stresses of caring for their loved ones. Currently, she works with businesses and families in all 50 states to acquire business loans, life insurance, and annuities. She is contracted through One Resource Group, and you can contact her through her website, wfginsurancequotes.com. So, without further ado, Jennifer, take it away.
Thanks, Mike. I'd like to welcome and thank everyone for attending today. My name's Jennifer Lang, and this webinar is being recorded and will be available for rebroadcast later on. So please submit all questions via our website, wfginsurancequotes.com, or you can email me at info@wfginsurancequotes.com. Tell me your name and where you're from, and I'll get those questions answered. Today's webinar is entitled, How to Get the Best Life Insurance Rate. And as Mike mentioned, a person can either learn things the easy way or they can learn things the hard way. And in my case, when my mom got sick, I learned things the hard way. I, like most people, thought that life insurance was just something you had in order to pay for a funeral. I didn't know that there were certain policies that could actually help you while you're alive. So I do these webinars and I speak to businesses and organizations because I want to help as many people as I can reach their hopes and dreams and avoid those financial learning curves that I went through. So let's jump in. Now, you may think the odds of something bad happening to you are small until it happens. And the most honest answer I can give you about how much life insurance you're really going to need is it's going to depend on you and your goals. The general rule of thumb on this states that the death benefit payout of your life insurance policy should be equal to 7 to 10 times the amount of your annual income. But this amount alone may not account for other needs your family might face if you suddenly weren't around anymore. Things like paying off any debt you had accrued, settling final expenses, continuing with the mortgage payments, or those surprise upkeep costs. Financing your children's college education, or even helping a spouse continue on their road to retirement. And these are just a few of the pain points that your family might face without you. So beyond a baseline of funds necessary for your family to continue with a bit of financial security, how much life insurance you require will be up to you and what your current circumstances will allow. So once you've calculated and you have a good ballpark idea of how much life insurance you're going to need, we next need to decide on what type of policy you'll need. Life insurance helps you the most when you have dependents, such as a spouse, children, or other loved ones that you want to provide for upon your death. And the type of life insurance you have can change as your needs change. That's why it's important to know your goals for purchasing a particular insurance policy. Let's start with term life insurance. Term insurance is like an apartment lease. You, in essence, are renting insurance. With term insurance, you pay a set premium on a regular basis, and your loved ones are guaranteed a set amount upon your death. And during that term for which you are covered, say 10, 20, or 30 years. And if you do not die during that term, The coverage and the premiums go away at the end of the term. So just like a lease, once the lease is up, you typically renew. And generally, buyers of term life insurance are interested in covering the loss of that breadwinner. And the other type of life insurance is cash value life insurance. Cash value life insurance includes whole life, universal life, and variable life insurance. These policies provide a benefit upon death along with a savings component. Part of the premium covers the death benefit and the other part goes to a savings, which is the cash value part, where earnings accumulate tax deferred. And you can access the cash value during your lifetime, but that may affect the death benefit. Buyers of cash value policies are interested in permanent life insurance protection, which covers them their whole life and provides an additional retirement income. The following video goes over the questions life insurance companies ask and how to prepare.
What questions do life insurance companies ask and how to prepare? If you're buying a life insurance policy, you could be asked these 6 common questions on your application. Applying for life insurance is an important step, but with all the questions during the application process, it can start to feel a bit intrusive as well. You might expect to be asked a few simple questions about income and health, but it's unlikely that you'll expect the deluge of questions about your hobbies, lifestyle and net worth. These may seem like unnecessary, even prodding questions, but rest assured, these are likely typical life insurance questions. The purpose of which is simple: to help the life insurance company identify your life expectancy and overall risk. Like most things in life, when you understand the purpose of their questions more clearly, they'll become less alarming. So let's take a few moments to demystify the questions on the life insurance application. Why is the life insurance company asking me for personal information like my social security number? We're taught and reminded constantly not to give out our personally identifiable information. Identity theft is a growing problem, and one that we should all be vigilant against. That being said, providing your social security number, birth date and other similar information on your life insurance application is necessary to the process. A life insurance policy is a written contract that formalizes the agreement between the life insurance company and the policy owner. The insurance company is the only party to the contract that makes an enforceable promise, which is to pay out the face amount of the policy upon the policy owner's death. While it is true that the policy owner must pay the premiums as they come due to keep the policy in force, no promises are made to continue paying those premiums. Therefore, the life insurance company must verify that it is indeed you they are insuring. With your social security number, they are able to confirm your identity with a government-issued ID, and, in no exam cases, confirm your health status. Without that information, it could become possible for them to mix you up with another person who has your name and birth date. Why do life insurance companies need to know so much about my finances? It may be taboo to reveal your salary, net worth and other asset information, making you feel uncomfortable about disclosing it to third parties. However, revealing your financial information to the life insurance company helps them understand how much life insurance you both need and qualify for. Salary is a great indicator, but knowing your total worth, including the value of your home, cars, investments and retirement accounts, paints a more vivid picture about what exactly you expect to protect with life insurance. What do they care if I'm traveling? Your family cruise or impending trip to London is unlikely to raise red flags from insurance companies. Yet, when applying for life insurance, you will undoubtedly be asked if you have upcoming travel plans. What's the deal? While your road trip across the country may not matter, if you are planning to travel to war-torn countries or regions where contracting a deadly illness is likely, it may affect your premiums. You'll see these types of questions on the life insurance application to better assess your risk of death, making sure the life insurance company gives you the most accurate estimate possible. What do my driving records have to do with my life insurance? Have you been in a few fender benders in the last couple years? Or are you accruing speeding tickets, running stop signs or red lights? These are considered behaviors that could increase your risk of death. A safe driver is considered less risky, so the life insurance company will ask about your driving history to understand whether or not you have a clean driving record. Do my hobbies really matter to a life insurance company? The short answer is yes. If you bungee jump, skydive, fly planes or helicopters, or your job is unusually dangerous, you may be included in a higher rate class even if you're healthy. The reason for this, someone whose primary hobby is base jumping has a far higher risk of death than someone whose primary hobby is baking cupcakes. Why does a life insurance company care about my mental health? Mental health may not immediately seem like an important factor in life insurance. Surely heart disease and cancer are greater indicators of death risk, you might think. While it's true that physical health is important in determining your risk, if you take antidepressants or suffer from mental illness, you may be considered a greater risk. Asking questions about your mental health helps the life insurance company to determine the proper rate and insurance policy for you. Applying for life insurance can surely feel like an interrogation, but every question the life insurance company asks has a distinct purpose. Even if your answers to these questions drive up your premiums, it's important to answer honestly so that your beneficiary's right to your life insurance claim can't be disputed. We hope this helps and you're well versed now in why life insurance companies ask certain questions on the life insurance application.
So the best way to view life insurance is as a form of risk management, because we all take risks in life, even if it's just driving to work in the snow and rain. The next short video goes over how your rate is affected by your health habits.
Your life insurance rate and you, poor health habits. What are you digging so deep in your pocket for? If it's for a lighter, you might need to dig for some extra change, too. You'll need help to meet your higher life insurance rate if you're planning on lighting up a cigarette. Health details and everyday habits that may seem small or insignificant can have a massive effect on your life insurance rate. You may have heard something about the underwriting process. The purpose of the underwriting process is to determine how risky a person will be to insure. And the riskier someone is to insure, the higher their rate is likely to be. That risk is calculated by how soon an insurer estimates an applicant will need the full payout of their life insurance policy. Some factors that influence risk are out of your control, but did you know that your habits can also send your life insurance rate up? Here are 3 poor health habits that an underwriter will definitely uncover and will definitely affect your life insurance rate. 1. Smoking. If you smoke cigarettes, expect a higher life insurance rate, period. Even products like nicotine patches, gum, or lozenges can earn a life insurance applicant smoker status. At this point, are there really any lingering questions about how cigarettes affect your overall health and projected longevity? A bit of good news. The longer it's been since you quit smoking, the better things might look for you from an underwriting standpoint. For instance, some underwriters are only required to look back into your history as far as 12 months, so if you have quit cigarettes for a year, you may end up with a better classification, and a better classification potentially means a better life insurance rate. 2. Being too overweight. An underwriter will also assess your height to weight ratio. Your unique ratio will classify you according to a certain rate. Being overweight or obese increases health risks like stroke, type 2 diabetes, coronary heart disease, and high blood pressure, among others. So the more overweight you are, the riskier you are to insure. And what does that mean? You guessed it, your chances of a higher rate are significantly increased. 3. Drinking a lot of alcohol. Did reading about this poor health habit throw you off? After all, a few drinks isn't that bad, right? Well, a few drinks, no, but drinking in excess can start to have adverse effects on your overall health. Excessive or binge drinking would be 5+ alcoholic drinks for men, and 4+ alcoholic drinks for women, at the same occasion, on within a couple of hours of each other, on at least one day in the past month. Chronic excessive drinking brings these common health risks: liver disease, pancreatitis, cancer, brain damage, and more. How will an underwriter know if you're drinking to excess? They'll give you a questionnaire, you'll be subject to a medical exam, and they'll see your driving record. So if there is any evidence of drinking excessively and getting behind the wheel of a car, consider your life insurance rates raised. Kicking these 3 habits can have great effect on your personal health and on your life insurance rate. With a little effort, time, and preparation, you can put yourself in a better position for a potentially more affordable rate. But don't wait to get started. Remember, when you apply for life insurance, you may not get full credit for changes to these 3 poor health habits made in the 12 months prior to your application. Every insurer's rates are going to be a little bit different, and that's why you have an advantage by working with us. We'll shop around for the policy and rate that's tailored to your unique needs. So if you've been waiting for a sign to stop smoking, quit eating too much junk food, or cut back on drinking, consider this it.
I've got a couple of questions that came in. Jake from Washington writes, "Hi Jennifer." Hi Jake. "I'm a smoker and I've been putting life insurance off for a while, but I'm trying to get on the right road with my finances." Good for you. "So when I get my policy and I'm able to quit smoking, how do I get a lower rate?" Good question, Jake. And I totally understand how hard it is to quit smoking. But if you are able to quit nicotine for 12 months or more, then at that time, you'd be able to go to your insurance company and request a non-smoker's rate. And they would schedule a medical exam to verify, but at that point, you'd get a non-smoker's rate. Sound good? Awesome. Okay, and we've got another good question here, and this is from Mavis in Georgia. Hi, Mavis. And Mavis writes, "Hi, why am I at a higher risk because I suffer from depression?" Well, Mavis, think about it this way. It's not necessarily the condition as much as it is the medication that a person takes. The underwriters are looking at the side effects, and not all antidepressants are the same. Some may have mild side effects and others might have thoughts of suicide. So a medication with a harmful side effect would put a person at a higher risk. Make sense? Great. So when you're getting life insurance quotes, your premiums will be set in part by your risk class, which is defined by an insurance company's underwriting guidelines, and your policy amount and length are the other pricing factors. The better your risk class, the lower your premiums will be. Therefore, understanding your rate class is the starting point for calculating your rate. And I'll show you how to use this information at the end of the presentation to compare rates on your own. So let's look at the rate class categories, okay? And we can start with best class or super preferred. And this is considered the best category one can obtain for a life insurance health rating. Most people in this category do not have a poor health history, they are not taking any medications, and they are within the guidelines for height and weight. So they're healthy and they have no family history of diseases. And only about 10% of people qualify for this class. The next class is preferred, and this is considered the second best category to reach in life insurance health classes. At this point, you're deemed to be in excellent health with a few minor health issues that may be treated with medication such as controlled cholesterol. And you're within the guidelines for height and weight. You may have a family history of cancer or other diseases. And 20% of people qualify for this class. The next class is Standard Plus, and you're considered to be in better than average health, but you may have minor health issues. And you may be slightly over the height and weight guide, but you also have no family history of diseases. And 40% of people qualify for this class. Next is standard, which pretty much gets all of us. Although this may be in the bottom of the 4 general life insurance health classes, it's considered to be the most common category. You are of average health and you take multiple medications. Your height and weight guidelines do not meet the requirements, and you have a family history of cancer or other diseases. And 75% of people qualify for this class. Now, for the fun part, I'm going to share my screen and we're going to run some rates and see how all this works together.
Did you know that there is a simple way to instantly quote and compare multiple life insurance products online? Now you have the ability to apply for life insurance whenever you choose to without the need to speak to an agent. To get started, type in your first and last name, followed by your gender, then input your general health. If you use or have used tobacco or marijuana, height, weight, date of birth, and just like that, you will be given an instant insurance quote. Or if you are unsure how much insurance you need, you can use the calculator tool. By filling in your mortgage balance, debts, college planning needs, existing insurance, and savings, will give you an approximate benefit need, and you can easily update the quote. For this example, we're going to select a 20-year quote. The next page will show you a recommended life insurance product based on your input terms. You have options to customize the policy to fit your needs best. And if you scroll down, other products by different carriers will be displayed so you can compare all your options. When ready, click Apply in Minutes, and you will begin to fill out a digital application. It starts by asking for basic contact information, mailing addresses, employment information. If you are the owner of the policy, and if it's going to be owned by an individual, business, or trust, who the beneficiaries are, and their information, if you would like to include a contingent beneficiary, and your financial information. You will then be asked to fill out a health-based questionnaire. Please make sure to fill it out as accurately as possible to make sure that your case doesn't have any issues. If your policy requires an exam, you will see a calendar giving you the ability to schedule a time for a health examiner to meet with you at your convenience. Once all this has been completed, a digital application will be generated for you to sign via DocuSign. You can choose to draw your own signature in or use the one that DocuSign provides. Once the application is filled, it will be submitted and you will be contacted if any additional information is required. It's a quick, easy way to get the protection you need whenever it works best for you.
I hope everyone can see my screen. I just want to give you a few tips. I've logged on to wfginsurancequotes.com and we're going to click right here and get your rate now button. And that will take you to the quote and apply page. It automatically drifts down so you can easily go up or down from here, and you would just enter in your information and proceed through the system as it directs you. Okay? And if at any time you need help or you would prefer an agent to run the quote for you, you simply click on this button and it will take you to this page. And from here you just scroll down. Got some case studies here, and fill in your information and request a free, no obligation life insurance quote. I work with 4 other agents and together we're able to serve all 50 states. So regardless of where you are, we can help you. All right, but we're going to go back to the previous screen, and here we're just going to start our quote. So name, gender, health class, nicotine or marijuana use. Now, when it comes to nicotine and marijuana use, since marijuana is legal in a lot of states, you're going to have different guidelines and regulations from state to state and from carrier to carrier. But if you'll make a note that John Hancock and Prudential are our best carriers for the marijuana use and smoking. All right, so if those carriers come up in your quote, those might be the ones you want to go with. You can enter in your height and weight, date of birth. All right, and then when you get to the quote page, you can use this slider and you can slide it either down or you can slide it up. Takes a little while. All right, and you can choose whichever level of insurance you prefer. And then of course you can always use the calculator if you need to figure out the exact amount of coverage that you might need if you're not sure. Okay, and we're going to click next and it's going to get our rates. All right, now I just want to go back and show you one more thing. All right, from here you've got term, accidental death, return of premium. So these are your term products. The return of premium will give you every cent of your premium at the end of the term period. Over here you have your permanent policies. We've got final expense, guaranteed universal life, index universal life, and a long-term care rider. Okay, now with final expense, this is anything from $5,000 to $40,000 of coverage. pretty much considered end-of-life coverage, and this is available from ages 45 through 82. All right, and the Guaranteed Universal Life product, it guarantees your premiums, guarantees your death benefit. It goes up to the age 100 or 120, guaranteeing that coverage to the end of life with little to no cash value. So Guaranteed Universal Life is like a term policy in regards to the rates. All right. There are lower permanent coverage rates, but rates that cover you to the end of your life. That's why it's on this side. All right. And then lastly, we have the Index Universal Life. And with Universal Life, it'll run the quote for you. You can choose your pay-in amount, your monthly pay-in amount. All right. And it will give you the amount of the accumulation over a 15-year period, over the amount of 20-year period. And then once you click next, it'll give you the carrier. Right now, John Hancock is our carrier for Index Universal Life products. If you have any questions about this, you can just contact us and we'll be happy to help you. But right now we have other carriers who are pending, and as soon as they are approved, they'll be added on this side as well to the Index Universal Life. All right. If you get to your quotes, and let's go back here. All right, let's choose this. Jennifer's best rate is legal and general banner. Right here, it says I qualify for skipping the exam, which is great. But it's very important that you read this information in here. It says at 5'9", 135 pounds, you may qualify for a preferred health class. All right. This offers you an option to get Vitality, which is basically to change carriers. But John Hancock, they have a Vitality program that offers you discounts for good health. So if you're interested in that, you can click on that. But this is the most important part because it has the conversion details. Conversions can be requested anytime within the duration of the guaranteed level premium period up to attained age 70, whichever comes first. Policies issued at age 66 or over are convertible during the first 5 policy years. So what this is saying is that I have up until the age of 66, no later than the age of 70, if I want to convert this term policy to a permanent policy with this carrier. So pay attention to the details. And then it says you can save $14 by switching to an annual billing. All right. And you're also able to scroll down and see the additional carrier rates. Here's my contact information, and if you need me, I'm just a phone call or click away. Until next time, thanks and have a great day.